Hello guys, so it's Ivan Trades and today we are on the date of Tuesday on 9th of October 2024. So right now I'm looking at the Euro USD. We are in an overall profitable PNL. Let me set my stop loss to break even. As you can see right now, I'm netting like $9 from my entry and my TP and so right now you can see my TP has been tapped. I'm already out of the position. There was a 1 to 2 RR trade. So my analysis, I was essentially still bullish as I approached during the New York session. So my thought process on this trade right now on the high time frame, we were retracing right there in this liquidity void which was left by the Friday's high impact news, and then after retracing in it we seen an SMT wave GU because on the GU we did not sweep the previous day's high. On GU we did not sweep the previous day's high. We reached inside of days high time frame liquidity void, and it is a 4-hour it's like a 4-hour liquidity void, as you can see right here. Once we reached it, the price made an SMT wave there on the daily time frame. We did not sweep the previous day's high on the GBP USD, so we were expecting some bearish momentum. So on the 4-hour time frame, I marked the open of this bearish mitigation block. You can call it a mitigation block, and then I expected some bearish momentum onward. So the price on the lower time frame, you can see it was actually the opening price of this breaker block. I seen on the lower time frame, actually on the 15-minute time frame, another form of signature that signaled to me that we are indeed going bullish. We started to respect some premium arrays, so you can see that we instantly started to push back higher after touching the daily open. So what I was looking at is how this premium arrays started to be respected, and then I framed an entry which occurred actually in the macro. Even though I experienced some type of drawdown, I held on it. So I was targeting the daily open, the weekly open, which is in a close proximity to this all those liquidity, those low resistance liquidities, like you see this lows right there, how they are relatively successive, which were engineered in since the Monday's trading session. So what I did is to make a sell limit on this 15-minute breaker. You can see here there is some type. This was the low of the previous time cycle from 7 a.m. to 8:30. So in this time cycle, I expected if we are indeed going bearish, we should respect its low. So its low is actually on this candle. You can see it clearly on the 1 minute time frame. On the 1 minute time frame, its low is actually this one, where I placed my alert right here. So I expected that this low should hold, that the price should not reach this high right there. That's where I put my stops, and I expected at least some bearish momentum towards this weekly open, which consequently was providing me with 1 to 2 risk to reward ratio. I did not want to make my stop so tight, so that is what I got for. So let's see. I experienced some type of drawdown all over there. My entry was actually triggered during the macro. You can see here the macro of 8:45 to 9:15 macro during the New York session. So you can see that it actually hit TP. I trailed my stops a bit too late, and I got only $9, but that's okay. It's part of the process, and I just cannot complain at all. But we are still in drawdown of $36, but it's alright. So let's just wait for. You can see how price instantly started to rebound back up. So I had to close the trade early, so as to avoid being stopped out prematurely, because the broker feeds are most of the time very different. So that was the setup. That is my tough process during this trade. I'm going to remove this alert, and yeah, that's it. And thank you for sticking with me in this drawdown. If you have taken the same trade, so it's 7 trades. Happy trading. If you have not yet subscribed for more free content and trade recaps about my journey to success in trading, you are really missing out. So guys, see you. It's Ivan Trades. Subscribe and share the video if it helped you a lot about how to utilize the ICT concepts in trading. So that's it. Thank you.